Well, hello, everybody. This is John Larkin. I am currently with Clarendon Capital, which is a private equity firm that invests solely in transportation and logistics companies. Prior to that, I've spent many years in investment banking and in research, also focused exclusively on transportation and logistics. And in talking with some of the FreightWaves executives about what would be a good topic to address here today, we decided that SPACs would be an excellent topic. And my former partner and I, John Engstrom, who's currently at FreightWaves, some people refer to him as JT, I might add, suggested it would be great if we could line up Dan Hennessy, who has really been a pioneer in the SPAC world, particularly in the transportation and logistics universe. I believe his first SPAC was for a company called Bluebird Bus, which manufactures school buses, one of the big three. And the second one was with Dasky, which is a consolidation of flatbed and specialized in heavy haul trucking companies, making it the biggest flatbed and specialized heavy haul company in the United States, and maybe the world for that matter. So that's my background and the topic. And I thought I would turn the mic over to Dan, who's with me here today, calling in from Wyoming, and let him talk a little bit about his background and how he came to the idea that SPACs might be a good alternative in the capital markets today. Dan?
Sure. Well, it's thank you, John. It's great to see you again and to be here with you and with the FreightWaves team. And thank you so much for inviting me to participate. So a little bit of background. I began my investment career at a private equity firm, Code Hennessy and Simmons, based in Chicago. We had a great 25-year run, 1988 all the way through about 2015. But towards the end of our investment horizon there, we decided to wind down the portfolio. And so I put myself, as I call it, through SPAC school in 2013. And we put our first SPAC on file 7 years ago, October of 2013, John. So it's been a while. Back then, as I like to say, SPACs were it was a four-letter word. They were the skunk at the garden party. No one was particularly interested in hearing much or learning much about SPACs. So we raised our first SPAC in early 2014, and then we're really fortunate to have met the folks who, at the time, owned Bluebird. And Bluebird Corporation, the Fort Valley, Georgia-based bus company. And the private equity firm Cerberus Capital Management had owned them for a decade. They were looking for an exit opportunity, and we were very fortunate to have been able to put together a business combination, meaning we took the private company Bluebird and merged it up into our SPAC, HCAC. And John, you and the Stiefel team were tremendous supporters and advisors of ours at that time, and for which we're most appreciative. And so Bluebird became publicly listed on NASDAQ and is today under the ticker BLBD. And so the real reason and purpose behind that, two things. One is Cerberus needed an exit from the investment, and they ultimately achieved that after we listed, and their shares became publicly traded as well, and they could effectively liquidate those shares. And secondly, we brought capital to Bluebird. Bluebird needed capital to grow. They needed capital to invest in alternative fuels, which they did, and we're really proud of that. And also, they are the first, as far as I know, the first with a fully commercialized all-electric school bus on the road today, operational. And so, just to give you an example, when we started, the Bluebird was approximately 10% alternative fuels, including propane, and 90% diesel. Now we're 50% diesel and 50% alternative fuels and all electric. So that's quite a journey, an acceleration of what I call this brown to green transition. I predict within the next 5 years, Bluebird will be all alternative and all electric, zero diesel. That's my prediction, and that's the way the industry is going for sure.
Well, that's a great story about your first SPAC, Dan. There may be some viewers out there that don't really know what a SPAC is, and the letters that form the acronym are SPAC, and that stands for Special Purpose Acquisition Corporation, or SPAC. And it's a very unique vehicle in that an experienced investor that has a great track record, like Dan, for example, which he developed as a private equity investor at Hennessy, which he mentioned a minute ago, decides he wants to raise capital via a SPAC. So he goes out to institutional investors primarily who say, I really trust Dan's investment judgment, his team's investment judgment, and I'm willing to give him, $20 or $30 million, provided that he stays within his articulated focus area, which I believe was the industrial segment at the time. And let's say Dan were to pick a number, $200 million. He then has 2 years, usually, to find a company to merge with, which immediately makes that private company public. One of the interesting nuances with a SPAC is that the investors who invested in the SPAC originally have the option of agreeing that this is a good company to merge with, or on the other hand, exiting stage left. They get their money back, their principal, plus some interest for having it sit there for a year or a year and a half, however long it takes to find the merger partner. And usually the investment banking advisor to the SPAC has lined up what I'll call backstop capital in the form of converts, warrants, other equity-linked securities that can fill the gap created by the people who exit stage left, who decide they don't want to be in the school bus manufacturing business or the flatbed heavy haul trucking business. So once that dance is completed, the shares of Hennessy Capital Acquisition Corp. 1, for example, become the publicly traded shares of Bluebird Bus Company. And the company behaves like any other public company going forward, except that investors can rest assured that an experienced person who understands investments inside and out is on the board, Dan and maybe 1 or 2 of his partners, who can really guide the company during the early years of being a public company, because that's a pretty tricky world, especially given all the filing requirements with the SEC and the interaction that's required with public equity investors. So what's quite interesting, really, this year, in the year 2020, which some people call the mulligan year because of COVID, certainly things look pretty bleak in the April-May timeframe, but thankfully it bounced back quite nicely in the public equity markets and in the freight markets in particular. But all of a sudden, SPACs, which were pretty infrequently used on Wall Street, became very, very popular. Been increasingly popular over the last few years, but really this year they've arrived on the scene in what I'll call an avalanche. And one of the sectors that the SPACs have focused on is the electric vehicle space, or the alternative fuel space. And you probably read in FreightWaves, all you listeners, that Nikola, in fact, went public via the SPAC route and has had somewhat of a tumultuous initial history here with the founder having to step down and so forth. I'll let you read more about that. But a SPAC is a nice alternative for a company that wants to go to the public markets. The other alternative is a regular way IPO, let's call it, the way most companies have gone public historically. The other alternative typically is for companies to partner up with a private equity firm and stay private, but have some very smart institutional money alongside them as more of a partnership. So Dan, maybe you can illuminate us a little bit more on what makes a SPAC so attractive and why somebody like yourself would find that to be a great vehicle in today's markets.
Sure, John, thank you. So there are a couple of different use cases for SPACs, and I mentioned one. We had a private equity firm that owned Bluebird, an iconic brand, and was looking for an exit. In the second case, and this also is a name that many of you in the audience will know or have heard of, we partnered up with Don Daskey, a Dallas-based entrepreneur who had built up a sizable flatbed, heavy haul, open deck, specialized group of carriers under the Daskey name privately. And Don saw an opportunity to continue consolidating the open deck flatbed market, but lacked capital. He had actually gone all the way down the road to a regular way IPO, which John referred to, and unfortunately, the so-called window closed. It actually slammed shut. And so Don had all these potential acquisitions that were ready to be acted upon and acquired and added to the Daskey brand, but he lacked the capital. So we were introduced to Don and his team by the Stifel team, and we came to an agreement with him and brought Daskey public. And then within 15 months, we doubled the size of the business, okay, from about 700 million of revenues to close to $1.8 billion of revenues, 1.8 billion within 18 months as a public company, because now we had access to capital and certainly stock, which could be used as currency or consideration for these acquisitions that we added to Daskey. So there, the SPAC was clearly an enabler and a catalyst for growth. And so it was just a classic example of how you can build an organization and accelerate growth under a team, with a team, in partnership with a team. And I continue to serve as a board member for Daskey today. In the other example, John, I'd like to offer up, we just in August signed our definitive agreement to bring public Canoo Holdings. Canoo is a leader, and we believe the unrivaled leader in electrification, other than Tesla. And so we'll be bringing Canoo public here in Q4. We're providing over $600 million of capital between our SPAC, HCAC4, and the PIPE that we also raised in conjunction with our agreement, our definitive agreement. And so Canoo will then accelerate their path to commercialization and start a production on our what we call our lifestyle vehicle. That's a B2C product offering. And we're also going to advance and bring forward our B2B product offering, the final mile delivery van, again, all electric.
Think of Dan and Bluebird and Daskey and his electric vehicle company as an alternative when you're thinking about the various ways to raise capital to continue financing the growth of your business. But I think we're out of time, so it's time to sign off. I want to thank everybody for tuning in, and more importantly, thank Dan for sharing with us his wisdom on a very interesting financial vehicle, that being the SPAC. Thanks very much, Dan.
Okay, thank you, John. Great to be together.